Hello, this is Matt on the Moon Lambo channel. By the end of this video, you're going to be flipping out over this data that I just analyzed. And stick with me for this because, for this whole video if you can, because you're going to have your mind blown. And look, I don't normally say things quite like that at the start of my videos, but XRP just experienced one of the clearest, most undeniable signs of institutional accumulation that we've seen in a very, very long time. And I'm going to walk through everything with you, highlight exactly what happened, why it happened, and frankly, why this matters more than most people realize. And you got to look at a number of metrics because certain things, including price on the surface, you might look at it and tilt your head and be like, well, why does that matter? Well, just stick with me. I'll explain it all. And you'll also learn a bit about how institutions are accumulating XRP. And when I say that, I mean from a technical perspective in terms of like how the sausage is made. Because you'd be surprised. You know, XRP whales, they're actually able to accumulate XRP without actually pushing the price of XRP up. And they do that on purpose, and I'll explain exactly why. But before going further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. All right, so here was a headline from you today. XRP eyes rare $716 million on-chain whale anomaly as XRP price breakout brewing. And so what they're referencing here is this post from chart analyst Ali Martinez, and he pulled this data directly from on-chain analytics firm Santiment. And this frankly doesn't even do it justice. Here's what he posted. XRP just recorded 716 whale transactions, each worth more than $1 million. This is the highest count in 4 months. Okay, let me just tell you this, because you'd think, okay, well, if each whale spent only, 100 or rather $1 million, so you're talking about $716 million, which is the figure that you today cited right here. But honestly, I think the figure is almost certainly closer to about $7 billion. I kid you not. And I will show you, I'm not just making that, I will show you where I'm getting data from. So the vast majority of it would be from that cohort. That's a virtual certainty. The vast majority of it, okay? And so, yeah, we did just see 716 whale transactions. That is true. And yes, it's true. Each worth over $1 million. And to be clear, that hit the XRP ledger in a single day. That's what this is actually highlighted right here. It's saying that there were 716 transactions on the XRP ledger itself where at least 1 million XRP moved in a single transaction. So that's on the ledger. That's indisputable. No question there. And this is, I'll just be clear, that's the lighter gray. That if you're looking at the screen anyway, the lighter gray, that's what you're seeing. So this is going back several months, and each movement is a single day. That's why it looks the way that it does. Looks like it'd be, wild stair steps up and down. But look at this spike, and that right where I'm moving my mouse, that's what we're talking about right here. That's the big boy, right? And so this is the largest daily spike in 4 months. And here's the important part. This wasn't random. And this wasn't retail, just to be clear, okay? And we know that this wasn't people selling. This was institutional accumulation, period. Full stop. Absolutely, unquestionably it was. And now, yes, the whale transaction metric, it only tells us the dollar value that was moved on chain. It doesn't tell us the direction. It doesn't tell us if a whale was buying or selling. That is true. But when you look at all the surrounding data from the same time frame, which I'm going to highlight, it becomes extremely clear what happened. And so, first of all, let's point out price. So lots of whale transactions, right? It wasn't them selling because price didn't collapse. Okay, you'd know if they were. If whales were unloading, you would have seen violent red candles, unquestionably. And that has happened in history, not just with XRP, but all sorts of assets. That's not what happened here. Okay, if that were the case, and you would have seen cascading sell volume and a full breakdown in price. That's what you would have seen, both of those things, right? Instead, you saw XRP price basically go nowhere, basically nowhere. I mean, here I'll pull this is the last 7 days of the XRP price action, right? So yeah, basically went absolutely nowhere, right? So I just got to tell you, the fact that we had the price do what it did and all of those whale transactions, it's frankly astonishing. And so, like, that's exactly what happens during accumulation, though. Not when people are selling, not when institutions or just the whales in general are selling. And also, the chart shows this spike hitting on November 14th. And you know why that's crucial, don't you? Well, because on the day before that, you know what happened, right? November 13th, that was the launch of the very first United States spot XRP ETF. It officially launched, and I'm sure you've all heard that news by now. And day one saw around like $245 million in net inflows. And I'm not sure what the volume was for day two. It was obviously big, but it doesn't matter for the purposes of this video. Just obviously it was huge. And whenever a new ETF goes live, you know what happens, right? Authorized participants, liquidity providers, market makers suddenly have to source actual XRP to support XRP ETF creation. Meaning, to be clear, they have to buy actual XRP so that the XRP ETF itself is indeed backed by real XRP. That's why that matters. And so people just don't understand the scale of this. ETF launches are not just like some sort of fancy ribbon cutting ceremony. Like that is not what this is. They create enormous behind the scenes liquidity events. Because market makers, they have to build inventory. They have to actually do things. Custodians have to rebalance holdings because of demand. And prime brokers, they have to open new pipelines to support their clients because of the demand. And to be clear, like prime brokers, they basically serve hedge funds the world over. That's who their clients would be. So I'm sure many of you are aware that, for instance, Ripple bought Hidden Road, major prime broker, for $1.25 billion, and they renamed it Ripple Prime recently. That we're talking about that type of institution, which services thousands of it could be family offices, hedge funds the world over. And by the way, I'll explain more about OTC transactions in a minute, over the counter transactions. Let me circle back to that point because I do want to talk about that. But for the moment, let me just note that OTC desks, because of this, they suddenly get calls from institutions needing XRP exposure. Okay. And all that triggers massive on-chain movement. So again, I'm going to circle back to the OTC topic because that's a point of fascination. And I'm going to share with you some things that I think most people in the XRP community and broadly in crypto just have no idea. But guess what? The on-chain whale spike, it started on the 13th. It peaked on the 14th. And then it collapsed on the 15th, which was a Saturday. Okay. So the 13th, Thursday, okay, then the 14th, you see a spike, and then collapses on the 15th. That timing is not a coincidence, my friends. Listen, retail doesn't shut off on the weekends, okay? Retail doesn't. Bots don't shut off on the weekends. Degens don't shut off on the weekends. This is all true. But institutional desks, yeah, they shut off on the weekends. OTC desks, yeah. They're either closed or substantially reduced staffing. Pretty much just closed, though. What about custodians? Yeah, limited operation. What about prime brokers? Closed. What about hedging operations? Paused for the weekend, right? And ETF infrastructure? Well, they're Monday through Friday only. Do you see what I'm getting at here? So when on-chain whale transfers explode during the work week and collapse the second Saturday hits, that's not retail. That's institutional money. And so it basically fingerprints itself. That's what it's doing here. And so let me say a little bit more about OTC transactions, which again just means over-the-counter transactions, because this is something fundamental that I really think you need to understand so that you can understand the importance of the rest of what I'm about to share with you, because it's a much bigger deal than what I've set up to this point, but I got to go through this in a particular order, so please hang with me. But this basically just means that a large order for an asset was placed. That's what an OTC transaction is. Okay, in that order, it's not filled by purchasing the asset from like retail traders on exchanges. People like you and I. If there's a whale that's making an OTC transaction, and that's where you go. Like you make an OTC transaction if it's going to be large. You're not purchasing the asset from people like you and I on exchanges. It's sourced from other places. And as a result, all of that buying of the asset, in this case XRP, of course, it doesn't immediately move the price because it's basically behind the scenes. So, in fact, that's one of the primary reasons that whales use OTC. It's so that they won't move the price, as they're trying to buy or sell. They don't want to move the price. An OTC desk, just to be clear, it isn't some sort of like giant warehouse full of XRP that they can just, hand over, get the forklift and get that XRP over there. When a whale places a large OTC order, the OTC desk, again, meaning the company that the whale is placing the order with, they have to actually go find the XRP. They don't just have the XRP for the customer that placed the OTC order. They have to go source it. And they source it from multiple places, like market makers, custodians, like I was saying a minute ago, prime brokers, even other OTC desks. And yes, of course, cryptocurrency exchanges. And if they're buying from cryptocurrency exchanges, again, that doesn't mean from people like you and I who are selling on the exchanges. What I'm saying is exchanges have stockpiles of XRP and it can be sourced from that. That's what I'm saying. And so what the company, any company that will take OTC, again, just over the counter transactions, if that's something that they're offering their whale clients, what they're doing is they're stitching together liquidity from all of these institutional channels that I just cited. That's how they fill a whale's order. And so the whale doesn't have to know where all of it's coming from. The whale's like, here's how much I want to purchase. The OTC desk says, okay, gotcha. And then behind the scenes, they're going to all these different places to source it because they don't have it. They got to fulfill the order. That's what's happening, right? And so people like you and I on exchanges, we're not seeing that buy pressure. We're not seeing that at all. And that's what most people don't know. So even in situations when a whale never touches Coinbase or like say Binance directly, the world's largest exchange by volume, the OTC desk absolutely does. They hedge, they rebalance, they arbitrage, and they source, like I said, across multiple exchanges if that's what it calls for. And for some larger orders, yeah, they really do need to go to tons of different places to fulfill the order. And every one of those actions shows up as exchange volume, which is exactly why we saw that giant spike on live CoinWatch on November 14th. That's exactly why we saw it. I mean, you can look right here. Look at this gigantic volume spike on November 14th. It looks like it peaked at like $6.78 billion. Do you see how it climbed up from, so ETF launch, climb, then spiked on Friday, November 14th, the day after, and then see how it fell off a cliff going into the weekend? That's because all of the whales, they're doing business with businesses, institutions that don't work on the weekend. That is why you are seeing that, just to be super duper clear. It's huge. So OTC buying, it isn't like quote unquote like off exchanges in the way that most people imagine. The trade itself is private. Like if a whale comes in and they're making an OTC purchase, that transaction is private. You're not going to see that. But again, let's reiterate, the sourcing happens on public exchanges. And that is what creates the massive volume footprint that we saw. This is how institutional accumulation works behind the scenes. It's quiet. And it all happens without moving the market price of an asset. And here's where this gets even more undeniable, okay? Again, November 14th, the same day the on-chain whale spike hits its maximum. That's what I was saying. Right there on your screen. The XRP exchange volume on live CoinWatch absolutely went vertical. One of the biggest single-day spikes in recent months. And there are reasons I can absolutely be certain of this. And so just let me do things in order. That's why I'm saying if you can hang with me through the entire video, you're going to learn some things and it's going to answer any questions you might have up to this point. And you'll also understand, if you watch this whole video, exactly why I'm as excited as I am about this. It's just because in a nutshell, it's because it's absolutely vindication. We are right. The smart money agrees with us. This could not be more obvious to me. All right. Now, but live CoinWatch, excuse me. Just because live coin watch volume, I just want to be crystal clear about this though. Live coin watch volume does not include over-the-counter transactions. So you might be saying, okay, Moon Lambo, so lots of whales are buying over the counter, but over-the-counter transactions don't show up as volume on exchanges, right? So how could all of this volume that we see on Live Coin Watch be from whales? And again, I just want to reiterate this. We can be sure it is from whales because, as I've explained, when whales place OTC orders, a lot of that XRP will inevitably be sourced from exchanges. That is why. So it's not the OTC transaction itself that is tracked by Live Coin Watch. That's certainly not the case. But the actual USD value of these XRP movements that result absolutely are tracked by Live Coin Watch. That's why. So this wasn't just private desks, these OTC desks doing backroom deals. This was institutions just quietly, right there in the background, absorbing XRP liquidity on exchanges, but doing so in an institutional way. And this is normal. This is normal. It's not market buying like retail. It's not blasting price upward. It's not creating giant green candles. You see, institutions accumulate by buying from market makers, and their actions are specifically designed to avoid moving price. That creates massive volume without massive price impact, which is exactly what we're seeing here. It's just undeniably the case. So yes, November 14th shows a giant exchange volume spike and a giant on-chain whale movement spike, and the launch of the first XRP ETF the day before, and all activity dying instantly when institutional desks shut down for the weekend. It's obvious, right? So when you put that all together, there is no other reasonable interpretation, okay? This was institutional accumulation. It's large players repositioning and acquiring XRP. And frankly, I bet a lot of it is in anticipation of even more XRP ETFs coming, because they already got the green light here with this one. Because remember, institutions, they don't buy on rumors. They just don't. They don't buy because it's likely, They buy when the catalyst is official. When the liquidity is deep enough to absorb size, and when they can, they can hedge their exposure. And that all started on November 13th with the launch of the first ever US spot XRP ETF. That's why you didn't see this, this institutional ramp up, in terms of volume or anything else prior to November 13th. Even though everyone knew it was a virtual certainty that the first US spot XRP ETF was going to launch. I made more than one video highlighting this. One of the videos I went really in depth as to why I knew it was a virtual certainty that November 13th was going to be the day. And I launched that video probably a couple weeks, maybe more than 2 weeks prior to that. So we knew it, but there are reasons that institutions still wouldn't move. And also, I want to be clear about something. The Canary Capital XRP ETF, Canary Capital, of course, is the company that launched that first XRP ETF on November 13th. Well, the Canary Capital XRP ETF net inflows in the first 2 days it was live were actually small compared to global XRP volume, even though it is true that the Canary XRP ETF was the largest and most successful ETF launch in 2025 out of, frankly, and this is amazing to me, I made a video highlighting this too, but out of about 900 new ETFs being launched. And not just in crypto, but all ETFs, the XRP ETF was the biggest one. But Canary's own trading volume and day 1 and 2 inflows were nowhere near large enough to directly explain the massive spike in XRP whale transactions and the explosion in exchange volume that we saw on November 13th and 14th. The ETF didn't suddenly do billions in trading. That's not what happened here. And so if you're looking at, almost $7 billion on just one day, November 14th, and if, I'm not sure what it was on the 14th again for, Canary's flows, but I know on the 13th it was 245 million. I just didn't look up that figure for the 14th before recording, but I don't think it really matters. But whatever it is, it would have been a small percentage, relatively speaking, out of that $6.78 billion for for November 14th. But what actually matters here is it's not the size of this first ETF with Canary. What matters is the fact that it exists at all. And this is a primary point I wanted to get at. The moment a spot XRP ETF went live in the United States, XRP crossed a psychological and structural line for institutions. Suddenly, XRP isn't just, some token in a lawsuit anymore. Thanks for nothing, Kim Jong-Ginsler, Mr. Burns lookalike. When this happens on the 13th, XRP, what happened is it becomes an asset with an approved spot ETF wrapper. It's a new regulated product. It's a way to justify exposure in a compliance meeting, right? That's the green light. That is the signal right there. Even though it was just one smaller firm. And again, it's not to belittle them. It's actually that much more impressive that they're such a small firm, and still largest ETF launch for all of 2025. I mean, to me, it's just that much more impressive. That's not to disparage them. It's to say that's really impressive here. But, look, institutions, they don't need a giant BlackRock-sized XRP ETF to react to the fact that this is now the new reality. They just need the first one to go live to say, okay, now we can move. Now we can build positions. Now we can front-run the flows that are going to come later when bigger ETFs arrive. That's what they needed. They just needed that signal, that one move from Canary to get the green light. And you can see what happened. This isn't exactly wild speculation for Moon Lambo here. You can see on your screen if you're looking. Look at Live Coin Watch. That is some serious freaking volume there, right? It just is. So, so when you see the pattern where, the ETF launches on the 13th, and then on the 13th and especially the 14th, we get a surge in on-chain whale transfers and a giant spike in exchange volume. You're not looking at volume from the ETF itself, obviously. You're looking at all the plumbing that turns on around it. That's the key point. I think so many people do not understand that key point that I just said right there. Authorized participants sourcing XRP, OTC desks filling institutional demand, funds and OTC desks deciding this is the moment to finally get serious about XRP exposure. The ETF was the trigger and the justification for these things. So the huge numbers we're seeing on chain and on exchanges are the broader institutional response to that trigger, not the ETF's own trading. Hell of a start, right? When you think about it like that. Hell yeah. So yes, this is exactly what whale accumulation looks like. It's price holding steady, which is what we see. It's on-chain whale movement going vertical. It's exchange volume exploding. Institutional desks operating only during business days. All of it lining up perfectly with a major structural shift in XRP status in U.S. markets. That is what we're saying right here. You're starting to get the bigger picture here. And this is just the beginning, mind you. So smart money just moved and moved aggressively. And they didn't move because of hype. That's not what they do. They did all of these billions of dollars. It's not in one day, mind you. It's not because of hype. They moved because the infrastructure for institutional XRP exposure has finally begun. And if this is how institutions behave after the very first ETF from a tiny issuer, Canary Capital, imagine what happens when the bigger players enter. It's going to get absolutely wild. And keep in mind, just because all of this institutional buying didn't immediately blast XRP's price higher, doesn't mean it wasn't bullish. In fact, quite the opposite. Quite the opposite. This is exactly how major accumulation phases work. Institutions, they buy in ways, again, let me say it again, institutions buy in ways that deliberately avoid moving the market. This is on purpose. They accumulate from market makers, again, prime brokers, custodians, all that, which I know I said. I'm sorry if it sounds like I'm beating a dead horse. I just want to make sure you guys are getting it. So they're buying from all those sources, and they're not doing it by smashing market buy buttons like retail does on Coinbase or Binance or whatever. That's not what they're doing. So the price doesn't move at first while they're filling up their bags. The price does not move at first, even while, and yes, it's true, even while billions of dollars in demand quietly soak up supply behind the scenes, the price doesn't move. Yes, that's by design. Yes, it's intentional. This is true of any asset that's getting broader success. It's happened with Bitcoin, it's happened with Ethereum, and here it is happening with XRP. The answer is yes. Just most people don't know what I'm telling you right now. And that's a key fact. Again, most regular people in crypto have no freaking idea about this, what I'm telling you. Almost nobody understands this. People just assume that if institutions are buying, it just causes the price of the asset to rocket right away. But that simply isn't true. What happens is they buy in a deliberate way to not increase the price, then it rockets. The fact that you can see for sure that this absolutely unquestionably is what's happening should have you giddy. It should have you excited. This is undeniably, it's the case that these are institutions purchasing here. I can't take anyone serious if they're going to argue to the contrary. Of course that's what's happening here. And if you've been following me for a while, you know I don't normally talk about this, and I don't speak with this level of confidence unless I really am that confident and for good reason. Otherwise, I'll be like, I speculate it's so-and-so. I'm telling you this is what it is. I have zero doubt about this. And that's why I'm excited. It's already happening. This is it. This is the proof. I mean, you just wait. And so here's why that's ultimately so good for XRP. Everything that I just said, right? Including the fact that, actually specifically the fact that all of these institutions, these whales, are buying XRP, which is unquestionably true. The reason that's so ultimately good for XRP is, once that inventory is absorbed, and it's in institutional hands, which is what we're talking about when we're talking about whale purchases, it's off the market. Okay? Market makers get thinner. Liquidity supplies dry up. And when retail demand eventually kicks in, and it will, or when larger ETFs start going live, there's far less XRP available on public order books. Far less available. That's when price dislocations happen. That's when they're going to happen. That's when rallies ignite. This is the precursor to that. Okay? Institutions buying quietly, it's not supposed to move the price on day one. It's designed to move the price later, specifically. When the rest of the market wakes up and discovers the liquidity they used to rely on has already been absorbed. That's what we're talking about here. So even though the XRP chart looked calm on the surface, I mean, look at the 7-day price action here. XRP is $2.27 as I record this. And, after the XRP spot ETF launched, you could actually argue the price of XRP went down a little, mostly sideways, but down a little bit, kind of trending slowly down for a few days. So the point is, what actually happened, underneath, like behind the scenes, it's the kind of silent supply squeeze that sets the stage for much bigger moves down the line. Quiet accumulation now becomes violent price expansion later. That's the key takeaway. That's why I made this video. This is a much bigger deal than I see anybody talking about, and I didn't see people connecting the dots. That's why I made this video. I saw people talking about that chart from Ali Martinez where he got that data from Sentiment, and all these whale transactions. It's a 4-month high, he said. I looked at that, and then I was like, oh, and then I looked at the volume on here, and I'm like, oh my god. And then you look at the timing, when the ETF launched, and you can put the pieces together. And I've been around long enough to know that this is the precursor to massive moves to the upside. There's not enough XRP for everyone on the planet, not at these prices. And so again, this is institutional adoption. It is happening right now. It has been for some time, but you can see even most recently the ETF surge. And this is just the beginning here. So yes, it's doing it. Yes, it is true that it's not moving price, but it's going to. That's what I want you to know. It's already happening. It's intentionally not moving price because you don't see it on order books on exchanges. It's happening behind the scenes. If you were large enough to place a gigantic order for XRP OTC, then whoever you buy from, could source it from Coinbase. And then nobody on the exchange, like regular people like you and I, we wouldn't see. We're not going to see that. We're not going to see it in the order books. So it doesn't immediately impact anything. Do you see why this matters now? But that's if you purchase 1 million XRP, and it's OTC and it's not on the book, so you can't see it in that regard. That's still 1 million less XRP that nobody else can purchase because it's now being hodled. That's what's happening right now, folks. And so it's just going to get, I'm telling you guys, it's just going to get absolutely ridiculous here. I don't know how long it's going to take. I don't make price predictions like that, but it's going to be huge. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.